Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk about the tariffs, trade wars, a complete Forex Futures and stock market scan. I think it's going to be an interesting session. We've seen absolutely incredible volatility across Wall Street. We saw a major crash yesterday, and now we've got a big-time rally today. And I don't necessarily know where we're all going. I can tell you that. I don't know where these markets are going, but volatility is the rule. These daily ranges are absolutely staggering for the U.S. equities indices, and the U.S. dollar has been the big loser. Today we're seeing a bit of a rebound in the dollar, but I will say that things have definitely changed. Things have definitely changed from, I would say, early this year. These are completely different markets than what we saw last year. Completely different markets than what we saw 6 weeks ago. The trade wars and the tit-for-tat tariff battle is dictating everything. And right now we've got action in pretty much every asset class you can imagine. So we're going to look at a lot of them. If you have any products that you'd like me to look at and throw them on my charts and take a look and give you a market read, feel free to throw those in the live chat. I'll do my best to answer everybody's questions. And if you just have some basic questions, just be sure to ask as well. So it's good to see everybody back. Team Marine, always a pleasure. Claudio, Lewis, always a pleasure. Guys, Lita, good to see you too, Lita. We're across a bunch of different platforms. So if your YouTube channel goes out, you can also check us out on How to Trade Com YouTube, Forex Signals Com YouTube, Shane V_Trader on X, or in the How to Trade Trading Room. So feel free to join us wherever you may like. All right, guys, we've got a lot to go through, and I want to start off with a trade follow-up. We haven't done one of these in quite a while, but we had a trade actually go live, and this was sort of really a strong trade for me. Anytime I have indicators that intersect, and I use Fibonacci retracements almost exclusively, but I also love my 13-period EMA. And when, in fact, we get that intersection between a horizontal Fibonacci support or resistance level and a longer-term EMA, we've got a real strong chance to win the trade. And this was a trade that I would call this a layup. All you basketball fans out there, a layup is the easiest shot there is. It's like a little 2-foot putt. It's a real easy shot, and this is one of those trades that if we could just get enough of these, we could make a very, very good living trading them. The problem is they don't develop very often, and they don't come our way very often. So when they come our way and when we see a setup, we got to capitalize. And this is one of those trades where you've got to be very aggressive with because they just don't come around very often. But this one right here, converging indicators in the Australian dollar, US dollar, you can see we've sort of got our sell signal down here. I believe it was, 84.19, something like that. And we were looking for just a quick 40 pips profit, and we got it. It was relatively straightforward, relatively easy trade. Nice big spike high there, a nice big crazy, absolutely crazy low in March, and then a big rebound. Or excuse me, this is April's low. April's low, bang, you can see volumes picked up, and we went right up to our level right there, 64.28. And you've also got your 13-period EMA that came in there at 64.28 as well. It just doesn't happen like this. Very, 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 very rarely do you get this kind of action. What I will say is this. I don't like 50% retracements. Can't stand them. I've seen too many traders lose too much money on 50%. In my view, it's just too big of a public number. I'm not really interested in it, except when we have additional evidence, when we have supporting evidence, or we have a confirmation device, or we have a converging indicator like that EMA, then we have a great chance to trade. And especially right around 64.28, about that 64.25 handle. Our sell, I believe, we put it on at 19. It was a very aggressive entry, but we got it. We got a nice big check of that. Our high was right up there at about 64.39. I mean, we just went right to our number and stopped dead in our tracks. And you can see from our 30-minute chart exactly how this trade panned out. We were looking for, I believe, the profit target was 64 or 63.79, somewhere down in there. And you'll see right there we went to 63.77. So you should have already racked up that profit. That was really a fine trade, one of those trades that I really, really enjoy because there just isn't much pain. There really just wasn't much pain up there. You got the big sell-off, and now the market's just sort of mucking around trying to figure out which way we're going. The U.S. dollar is showing a bit of strength against the majors, so I'm not really sure that this downtrend, this macro downtrend is going to continue from here. But if you did have a position short on, your trade location's probably pretty darn good. So I would be watching this closely. In my view, the trade's already over. You're plus 40 pips. But if you wanted to hold it and take a position, I would be looking at that long-term 38% somewhere down around 63.07. So about another 100 pips to the downside. And I think that's more than likely where you'd be looking to exit this trade, price 63.25, just to be safe. But for me, I'm in, I'm out. It's that simple. Let me see. Let me see. Mubarak, for God's sake, please tell me one strategy. I'm dying out here, sir. Well, that's That's the $1 million question. Everybody wants one strategy to follow and one strategy only, and I don't necessarily believe in that. I don't believe in that. I can tell you that if you look at our trade ideas, you're probably going to do pretty well. The biggest challenge with the trade ideas is they're issued ahead of time, and they don't often come into play. So you got to wait for those. So that is going to be a Fibonacci retracement with an EMA type of a combination. That's built on fractal geometry. That's what I use, the Fibonacci counterpunch. However, our How to Trade Com YouTube channel, I put out probably 20 strategies on there. We just put another one out today, which is a trend line reversal. And the idea is to give you guys a good look at a bunch of different strategies. They can all work for you. Just be aggressive with your risk management. Understand what you need to do to be successful within the framework of each strategy. And I think we spell that out on live streams. We spell that out pretty good in the videos. Pick one that you like. So it's not really up to me to tell you, Mubarak, what exactly strategy you need to use every single day. I know what I use. I use Fibonacci's. I use a little bit of market profile. I use some rather advanced stuff. But you've got to find a strategy that makes sense to you, that's intuitive, and that complements your inputs, your available capital, your time, and your goals. If you do that, then you've got a chance. So I understand we're going to cover another strategy right now here in a second. But the idea here is to get you thinking, give you some opportunities to really grab a strategy and apply it in the live market where you have a lot of confidence. Now, the difference probably between what I like to do and maybe a sort of I won't say a novice trader, but a younger trader, a trader with less experience, is that I've legitimately been in the market since 2011. I mean, I'm getting old here. I've been in here 14 years now. I said a decade when I started. I've been in 14 years, and over that time period, you find out what you want to do and how you want to trade. And the way that I trade is probably not going to be the way that you trade. And the way that you trade is probably not going to be the way that I trade. There is no holy grail, like T. Marina says, and there is no right answer. There is no right answer. The right answer is the one that makes money. That's the bottom line. It's the one that makes money. So if you're making money with whatever you're doing, go for it. Whether it's the orb, whether it's the crossovers, whether it's Fibonacci's, go for it. My own personal reads and market breakdowns, I use Fibonacci's because they give me a real good idea what's happening in the market. It's because that's where my experience lies. That's all. Dave H., good to see you, Dave. Let me see you, Lewis Shepard. I went back to trading basic trend lines, and they work well enough. We put a video out on the channel today, Lewis. That's on trendline reversals. Check it out. It's the Third Touch trendline reversal strategy. And remember, if you want to trade anything, head on over to Switch Markets. They've got thousands of markets, 100% credit bonuses. They've got a lot of different ways to get you into the market from a position of strength, meaning you're going to be able to boost your capital efficiency. You're also going to be able to apply any strategy that you'd like on really any markets you'd like, and that's over at Switch Markets. So go ahead and check it out. All right, here's another trade follow-up. This is going to be another Fibonacci trade. This is one that I put out yesterday, and it hasn't quite gone yet, but I think we're going to get a chance, maybe if not this week, next week. And I think it's going to be a real strong trade, a real strong trade. Now, this is the U.S. dollar, Japanese yen. This is a yearly chart. What we looked at is a yearly Fibonacci retracement level that coincides sort of with 2024's low in the dollar yen. Now, we have been absolutely bullish, the dollar yen, really. I mean, going back to 2021, the post-COVID era, pretty much every currency in the world really nailed the yen. And a lot of that had to do with the Japanese levels of debt. It's the most indebted. I believe it was the government was carrying the most debt of any government in the world. It was really a situation where the yen was underwater and it wasn't coming back anytime soon. So in order for us to be successful, we lined up against that fundamental and just said, yeah, dollar yen, buy it. Great Britain pound yen, buy it. Euro yen, buy it, because there was no real chance that the Japanese yen was going to make a comeback until the BOJ, the Bank of Japan, until they did something policy-wise, meaning raise interest rates or hold them higher than usual or do something. You had to figure the yen was dead as fried chicken. Well, it's back. It's back now, and that's one of the reasons why we put this trade up. You can see you're on a real big 4-year tear, 4 years, really going back to COVID. The post-COVID era has really been tough on the yen, but this year has been different. Now, you're off about 10%. That means the yen is gaining ground on the dollar. This is a clean-cut wave, right from those COVID lows to those really lofty highs up around 160 in this dollar yen. And this pullback area, 38% is right around 138.63. Now, you've also got 2024's low to contend with, and that's at 139.57. So we put in our entry point, which is right around 138.89, I believe, 138.94. It's going to be very aggressive. Essentially, we're going to be buyers pretty much right under 139. That's a pretty darn good entry point. Now you say, Shane, that's 200 pips away. I go, yeah, but in this market, this dynamic, the way things are moving and the amount of volatility that we're seeing, you could get that trade and you could get it later today, believe it or not. I mean, you could get this anytime. The right tariff announcement, the right agreement, the lack of an agreement. Maybe Japan says something about tariffs. Maybe they want retaliatory. Who knows? Bottom line is this. That level's in play. I'm watching it closely, and I think we're going to have a real strong chance there to step up and maybe grab 100 pips on just a bounce from what I would call a robust support zone, an absolutely robust support zone. Absolutely, Lewis. It's right in the How to Trade channel, How to Trade Com YouTube channel. I mean, it's the trend line reversal strategy. Not many people are viewing it. It's not coming up in the feeds, but if you go there and you just take a look at it, you can sort of beat YouTube's algorithms and take a look at the video that we put. We put one out every 2 weeks, and most of them are strategies. But next week's going to be, the next video is going to be a little bit different. And also keep an eye on those shorts. We put a lot of shorts out that are based on the videos as well. Excuse me. So that's a good look at the dollar yen. I think that trade idea is pretty darn good. Now, sort of shifting gears into our 920 EMA strategy, our 920 crossover. This is a pretty good strategy. I really like this one. This is our coded strategy. When the 9 crosses over the 20, we're looking to buy. And when the 9 crosses under the 20, essentially you're looking to sell. This is really a time frame and an asset class that you have a real chance to make successful swing trades and also investing decisions built on the 920. Now, long story short, you can see our RSI confirmation down here. We didn't really dive into oversold territory right there. We were close. We didn't quite get beneath that 30 on the RSI. We did right back in here and sort of ended up leading us to a false signal. But what I want to focus on right now is what's happening in Netflix. Now, we talked about the Netflix last week. We said, okay, earnings are going to drop. You're going to get an earnings report. It may, in fact, turn out to be a real good time to buy Netflix. We had our crossover. Right there was our 9 crossing over our 20, and there was our bid, and there's our break. So our bid was going to be right on the close of our golden bar, which is right around 975, and now we're up at 1,050. So really a rock solid trade. If you in fact wanted just to make a few bucks on that, you probably could have already taken the money off of this Netflix trade. But I think the big thing that I would be looking at here with Netflix is that you've got sort of a compression pattern. You've got 3 signals here, 3 buy signals that have sort of occurred at a real similar price point. And you can see it, it's not real great trading right there. You got made a little bit of money to the top side there, and then you cross back under, and this one was just an abject, complete loser. We got caught up in the tariff stuff, the rare earth minerals and the tariff talk, and then bang, you lost there. But now you're in a position maybe to grab that breakout, a real big breakout to the top side. So if I'm watching Netflix, I'm doing something like this. I'm saying, okay, there's my resistance zone, natural resistance right up there around 1,065-ish, maybe somewhere in there. And you can see we've already challenged that area. Once we break above that, there's nothing up there. There's nothing up there. You're going to be making new all-time highs. My guess is if in fact that resistance level does give way, then you're just going to keep going up in $100 or $50 increments, 1150, 12. My guess is your next stop will be 1250, which would be a gain of about 25%. Pretty good gain, pretty good gain. How long would you think you would be holding that maybe? Could be a while. It could be a while, and you could be going for a real rocky ride because of the tariff talks. Right now it's all about tariffs. It's all about banking. It's all about tariffs, interest rates, the IMF. We're going to talk about the IMF here in a second and what exactly they believe the trade war is going to do to the global economy. But right now, that crossover, that Netflix crossover, definitely did not lead us astray. Pretty darn good bid there. All right, one more, and then we're going to go ahead and get on with a little bit of talk about some fundamentals. Here's another crossover that we've been scouting for a long time now. We've been scouting for a long time, and you can see this is Tesla. Now, Tesla's been getting absolutely destroyed really since the beginning of the year. Big-time losses. We traded probably, let's see, right up around Inauguration Days. Trump was inaugurated on the 20th, somewhere in there. So you had a real strong valuation up there right around 4.25, and now you've just seen an absolute crash down to about 238. So you about halved the stock. I'm sort of in the camp where I want to buy Netflix, or excuse me, I want to buy Tesla. I'm interested because I think that it's a great company. I think that the EV market, even though it's probably going to shrink as the gasoline and the oil production here begins in the United States, ramps up en masse, I would expect the EV market either to hold steady or shrink a little bit. But Tesla still is the dominant player in that industry. And there's Tesla robots coming out. There's Tesla houses. There's all sorts of products that Tesla is going to be bringing to the market in the next decade. So do I believe this is a good long-term play? 100%. Now the question is where do we get in at? with stock trading, it's really tough to find great entry points. It really is. All you can really do is say, well, we traded up there. I love our opportunity for long-term growth. Maybe, just maybe, if we can get a discount buy, maybe somewhere down around 200. I personally like 180. I think that 180 zone going back to May and June of last year, last summer's value area, I really think that could be a darn good area potentially to bid Tesla, and I like that. I like a wash out of 200 and maybe bidding, something like a 185, something like a 180, 190. That's pretty good stuff down there. That gives us a real good chance to benefit from maybe a longer-term trade, maybe a 6-month trade, maybe a 9-month trade. So I'm looking at that relatively closely. But for today, what we have to be contending with and what we are contending with is going to be an earnings report, and it's a big one. Tesla earnings, this one's going to drop a little bit later today, after market, 22nd of April. That's today. And we're looking for an estimate of earnings. Top line revenue is going to be $21.27 billion. That's revenue. And then the earnings, you're looking at about 41 cents a share. I don't know that you're going to get those beats, but they've been selling a lot of Teslas lately, despite what you've been hearing in the media. I believe the registration of new Teslas was as high as it's been in quite some time. I don't know how that's going to pan out for Q1 earnings. My guess is this report's probably going to disappoint. But if it does disappoint, we'll have a chance of maybe bidding into a great level down there in a real attractive zone to be potentially going long on Tesla. So something to think about there. Let me see. Mubarak, plus a rumor Elon plans to resign from Doge, so probably a buy signal. Well, I mean, Elon's going to resign from Doge. One thing that most people don't realize is his contract from the Doge, the Department of Government Efficiency, was only about 130 days. So right now we're in day 92 of the Trump administration. We're got the first 100 days in the book. Realistically, he's only going to be in the saddle for another month, and then he's going to get back to what he was doing. So the Doge, I don't know what happens to Doge without Musk in there being sort of a cheerleader in the public face of Doge. What I will say is that it was always planned for him to step down in the first, let's say 130 days. So what was that, the first 5 months or so, roughly? So yeah, first 4 months or so, Q1, and it looks like it's going to happen. So remember, is that a buy signal? I don't know. I mean, I'm not really sure that Musk or any of them are worried about the market share. I think they know the company is positioned pretty well here in the States to do anything from selling EVs to robots. But I like the buy. I think we've seen a lot of political selling, a lot of activists, a lot of activist investors have really driven price way down since the whole Doge thing and the actions of Elon Musk and the federal government. Starting to see it come back though. Personally, in a perfect world, you'd love to see these earnings miss, big sell-off down to about 185, and then we get a comeback crossover, and you get a chance to buy from 200 and have a great fundamentals and great technicals looking towards a trade that could be very good. So I'm watching it. I think that it's going to be a pretty good market to buy into, and we just got to wait. We got to wait for it to set up. We get paid to wait. We don't get paid to trade. All right, let's take a look at our Tuesday, Wednesday, Thursday psychology. Today is Tuesday after the Easter holiday. Now, yesterday was an absolute light show on Wall Street. Tremendous sell-off. Today, we're seeing the bounce back. A lot of action in there, guys. So if you want to trade, the market depth is good. The volumes are good. There's a lot going on in what I would call just an absolutely frenetic markets and optimal trading conditions. Bob, good to see you, Bobby. Welcome. All right, Tuesday, Wednesday, Thursday, you're going to want to be aggressive. Our job on these days, the middle 72 hours of the week, is to trade our plan and aggressively pursue our P&L. If our strategy says trade it, we trade it. We're not into passing. We want to be trading right now. The conditions are optimal to get your risk versus rewards, to get your fills, to get in with minimal slippage. That's what this game's all about for retail traders right now. These are optimal conditions. Now, we want to ride the momentums. We want to make money as traders. Now, a lot of us, I talk a lot about risk management and protecting yourself and not getting knocked out and understanding what exactly it is to be a trader day in and day out, and that's all about risk. That's all about being able to manage what exactly you're putting in harm's way with respect to what exactly you're trying to make. That's when we do it. Tuesday, Wednesday, Thursday, I want to go hard. Monday, I always say dip a toe, take it slow. Game plan for the week ahead, Tuesday, Wednesday, Thursday, pedal to the metal. Friday, we're looking to throttle back a little bit and just make sure that we take some money for our labor for the week. That's my psychology. That's how I approach the markets. I've been doing that for a long, long time now. Week 17, this is what we're looking at today. Monday was Easter break. That one's in the books. Tuesday, Kashkari, they had Neil Kashkari and a few other FOMC members speaking, and they're speaking at the IMF, the International Monetary Fund. We're going to talk about them in just a second. And also the Wednesday new home sales, the EIA inventories, interesting day. Thursday, durable goods, existing home sales, and Friday, no donation Friday. So aside from tariff news and really breaking news events on the geopolitical front, not much going on this week, not much scheduled. Now, the IMF is a big deal. And what the IMF is the International Monetary Fund. These are the head honchos. These are the folks, the major players. These are the folks that really have huge input into the World Bank. These are the folks that loan countries money. These are the people that really World Economic Forum people, WEF. These are the folks that determine which way global economics is going to evolve as we move forward. So when the IMF talks, you probably should listen. I'm not necessarily saying you should be trading IMF rumors or any of the scuttlebutt, but it's important to really take a look at what they're saying, because a lot of times these are the same folks that control big chunks of money. These are what we call institutional investors, and if they say that the markets are going to go through a tough period, that's probably because they're divesting. That's probably because they're selling their assets. So the IMF slashes 2025 U.S. growth forecast to 1.8 from 2.7, citing trade tensions. So the International Monetary Fund lowered its 2025 projections for U.S. growth to 1.8, reflecting a cut of 0.9 percentage points delivered in January. The April 2 Rose Garden announcement forced us to jettison our projections, nearly finalized at that point, and compress a production cycle that usually takes more than 2 months in less than 10 days. So basically what the IMF is doing is they're complaining that all the tariffs and all the trade wars are making it impossible to see what exactly is going to develop in the global economy. Now, what we do know is this. We're going to look at gold here in a second, because you got to look at it. It's absolutely exploded amid this uncertainty. You're also seeing some bullish participation in silver, but really the big story is the dollar. The dollar struggling, the dollar index falling beneath 100, and that's what a lot of this is sort of suggests. There's massive de-dollarization going in, really coming in from international investors. Now, we've seen folks holding on to the dollars for a while now. That dollar's been relatively strong against the majors. Well, it's slipping bad now. One of the reasons why is you've got China supposedly dumping T-bills. I can't really say that for certain, but supposedly dumping T-bills. That's going to impact the money supply right away and theoretically drive the dollar down. But what's interesting about all of this is the IMF not really talking so much about the dollar per se. They're talking about growth. And when you say that growth is going to drop, you're saying you're going into maybe a recessionary cycle. And the way that the Federal Reserve and all central bankers fight recessions is to cut interest rates. And that brings us to the next point of our discussion here. This guy right here. He's out of there. It's a matter of time before he's out of there. There's been, the Trump administration's pulled no punches. They want him gone. Now, Jay Powell can stay in office. Make no mistake, his I don't know what you'd call it, his tenure or his term is up in 2026. So he can sit there for another year and a half maybe, and just keep doing what he's been doing and not give up the job. But the pressure is becoming palpable. There's a major move. There's a major effort in Congress to remove Jay Powell as the Fed chair. Now, if you can see right here, this headline, if Trump wants rate cuts, he would likely need to replace the Fed's full board along with Powell. Now, is that possible? Maybe, maybe not. What I'm saying is this. I believe Jay Powell is going to step down. I don't know what that's going to do to policy, but I think he steps down in the fall because the termination is going to be imminent there, especially if we don't get the rate cuts from the Fed that we were promised that we were going to get last September. They were calling for 3 or maybe 4 rate cuts this year last September. That has completely changed. It completely changed going into the election, and that has completely changed now. So what happens to Jay Powell if he gets turned out to pasture? He's gone. He's going to be gone, and he's going to be one of the biggest critics of the Trump administration as soon as he leaves office. This is a fascinating situation. I think he's gone. I really do. I think that Jay Powell is going to be history very, very soon. Now, I don't know what that means to monetary policy. Firing Powell would just be the first step in dismantling the Fed's independence. Well, I think that they're going to move to fire him. And that could be the beginning of a decommissioning of the Fed. We've talked about that. What I'm saying is there's a tremendous amount of uncertainty that's flowing into the global monetary system. Without a Federal Reserve, what does the dollar really look like? That's what brings us to gold. Now, you can see that it really does all dovetail. All of this dovetails. Now, there's talk of maybe pegging the U.S. dollar to gold again. I heard that. I said, I don't know if that's the best idea. You got to figure out if you have any gold first. Better audit Fort Knox first. But one thing is for sure, amid all this uncertainty, trade war uncertainty, Fed uncertainty, monetary policy uncertainty, everybody's bought gold. $3,400, an absolute explosion. Once we took out 3,000, we are up big. We are up big since we wiped out that 3,000 level, up about $500, $400. Right there, your high. Look at your high. $3,500.10. These aren't accidents. That's huge. It's an intermediate term, potentially a swing high. There was a lot of sellers at 3,500. And remember, we outlined this. We talked about, listen, the market's trending. Look at 3,250. Look at 3,500. Now, I didn't put out an official trade ID out on this. There wasn't time. I thought we had time. You got to remember, on yesterday's close, we were looking at about 34.24. I said, we got another day or two before we talk about 3,500 sells. However, if you've been watching my live streams for the last couple of years, you probably sold 35s or just beneath 35s. That's a great trade. That was worth a lot of money if you got it. I don't know what happens here. I don't see gold coming down in this environment. I don't see it. I don't think that it will come down. Of course, markets don't move in straight lines. We will get a pullback. And you can look at your daily chart and say, okay, where would you be a buyer at? Well, we've been trying to get pullbacks for a long time, 32.97, maybe 3,300. That's a great buy. You have to take that trade. You really do. On a daily time frame, nice Fibonacci there. You got to take it. But the other question is can we build a position sell up here? Now, I wouldn't do it from here. 3,400, I think you're way, 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 way too late selling. And you're also fighting probably the stiffest trend out of all the commodities right now. But if you wanted to sell it, I would be looking probably at one of these. I would say, okay, what do we got? Daily chart, XAU USD 920 crossover. I would be waiting for the 9 to across the 20 on maybe a daily chart. You see right there, you're severely in overbought territory. You have a chance, if in fact we do get the crossover, to sell this thing. Now, the last time you got a crossover was down in here. You made a little bit of money. You made a little bit more there, but basically you got swept up in a real hot trend. And that daily buy back on the 8th of January has sort of been the road to riches for gold traders. So if I'm going to trade gold and I'm going to trade it to the short, I'm going to have to wait for something technical, maybe one of these crossovers to develop to give me some way at least to get out of the market. Now, the 3,500 sell was brilliant. If you got that, fantastic. You should have been able to get in, grab $7.50 or $10 and just get out. That was really a brilliant trade and one that I really liked. Big round numbers mean everything in trending markets. There was no bigger than 3,500 round. Where do we go from here? I have to think we potentially could be going higher, but that 3,500 is definitely something to contend with. So let's go to a 4-hour chart and see exactly what our crossovers look like here. Okay, now we're starting to talk a little bit. Where's the crossover going to develop? You're deep, RSI. You're big time into overbought territory, so we're looking for a sell. If, in fact, the 9 crosses underneath the 20, that's going to be our sell signal. So we're watching that 4-hour. If you are, in fact, a gold trader and you're looking to take a short, you probably could do fairly well on this type of strategy here, looking to sell it. Now, you're fighting a big trend. So if, in fact, you do get the crossover sell, and we'll talk more about this tomorrow. We're going to go tomorrow and Thursday, probably Friday as well. Keep an eye on your stream schedule. But this move here, because you're fighting a trend, you may end up having to risk an awful lot if we don't get another swing high in front of this swing high up there like at 500 or 3,500. So what I would probably be doing is playing that one real tight, maybe right above your signal bar, just to make sure that you don't end up risking a full $100 on the trade, because quite frankly, that's a very expensive trade. You would have to use very low leverage, and you would also have to get a big move to make it worthwhile. So if you're risking like 100 on that, that's really hard, because you're going to have to get that market to come down at least another $100, which given this market dynamic, there's plenty of volatility there. It's possible. But given this market dynamic, I think you could be in real trouble holding shorts here. I don't believe that's the course of action that I would take. Let me see. Yes, sir. My baby gold has been going crazy. Yeah, gold is off the charts active. Okay, let's take a look at a few other things here. I want to go ahead and look at U.S. oil. I haven't covered U.S. oil in quite a while. Tomorrow we have the EIA crude oil inventories report, and these weekly reports are going to be getting more and more important. And the reason why is because we're all wondering, okay, the Trump doctrine was real simple. We're going to produce a ton of oil and a ton of energy, and that's going to be one of the big drivers of disinflation. We're going to cut energy prices in half and see what can happen. Well, right now you're trading right around $64, $63, $69 here with your WTI crude oil contract. This was an area that I outlined the other day. I was asked where resistance was where resistance was for the U.S. oil contract, and I believe I put it in the live chat here. There it is. I talked about that area between 63.97 and also that area right there, right around 64.50. This was really a brilliant trade. There's no two ways about it. The high was about 64.32. So if you were selling 64 and a quarters, you probably did very well on this. Right now, what do I think? Am I bullish or bearish? WTI crude. It's really hard to say. The dollar is losing so much steam right now. As that dollar goes down, typically commodity prices go up. In my view, the recent pullback in the U.S. dollar is the only thing really supporting crude oil. Now, we've got geopolitical uncertainty. There was a lot of panic about a potential missile strike from Israel on Iran. Supposedly, the United States said they were not going to back such an attack, and that sort of took the wind out of maybe potentially an escalation in the Israel-Hamas war in the Middle East. So that, in one respect, is going to be a bearish market driver. Greater oil supply here in the United States will be a bearish market driver. But what's really holding crude oil prices up is the dollar losing a lot of its puff. So if I'm trading this, I would be pretty much done selling that resistance zone. Remember, that's sort of a monthly Fibonacci, and then we've got a daily Fibonacci, and we had a nice 50-cent zone in there. It was absolutely beautiful topside resistance. I probably would be looking potentially for a break there, and if you do get that break, then selling right up there in front of 66. I mean, that's really a tough trade to beat. That's great trade location to the bear. I think you'll have a pretty good run there. Maybe going short at 65.89, something like that. I think you could wind up being in pretty good shape. And if in fact that one breaks, then you're definitely going to be looking to sell right up there in front of 69. We are coming into bidding season. We should start to see bids hit WTI crude because we're going into that spring seasonality here in the Northern Hemisphere. Remember, we typically see bidders coming into play in May. Usually by Memorial Day, we get a nice rush of pricing. If you couple that bidding season with the U.S. dollar sort of losing puff, then you've got a chance potentially to have a pretty darn good bull run here in May. But boy, if we start seeing those weekly EIA numbers really start producing big week over week gains, I think you're going to be in a bearish type of a situation with WTI crude oil. And also, if you start seeing peace deals, and we believe that there's one that's relatively close in Russia-Ukraine, you will see fossil fuels, natural gas. You can see the pressure on natural gas. It's off another 2%. You'll see pressure on natural gas and crude oil to the bear. Take a look at natty gas. I mean, this has just been an absolute rout, really going back to early April. Just a tremendous sell-off here in what was a relatively solid bullish market. You can see that back in early March, nice big rally up to almost 5, about 483.9, and that sort of coincided with our long-term Fibonacci level. That's one of the reasons why I trade Fibonacci's. Nice big spike high, nice big spike low down there, and I mean, that's like a magic trick. We called that almost perfect, and now the market's absolutely crashing. So I think there's a lot of optimism here for WTI crude oil and natural gas to the downside. Potentially, this crude oil pricing of the next month to 6 weeks probably should be the worst of it. I think as the summer goes on and as we get into maybe late July and August, you'll start to see those those crude oil prices come down as we get ready to go into fall seasonality, especially if you get peace deals and greater production here in the United States. I could see crude oil, I could see natural gas, I could see both of them going down decisively. The real question is how long does it take? Well, that's sort of where we're at. We're beneath that key level right around 64. 64.45 is huge to the top side. If you do get that big extension, I'm still sort of waiting for the big wash out of this zone. I think we could definitely get it. Could definitely happen. All right, everybody, I'm going to go ahead and sign off here for a few hours. We're going to be back tomorrow. We're going to be talking Workshop Wednesday, the 920 EMA crossover scalping. We're going to do some live trading as we did on the last workshop. I know a lot of you really like the workshop, so we're going to go ahead and do one of those tomorrow. And then we'll be back on Thursday with another complete market scan. We'll have an opportunity to do a little bit of scalping and swing trade ideas. But we're going to take a look at what the markets are doing. We're going to be in a much different place Wednesday than we are right now. It's already been a fascinating week. We finished down just about 1,000 yesterday, and right now the Dow's up about 644, 645, but we were up 1,000 earlier, so there's sellers in here. There's a lot going on, and a lot of it has to do with your tariffs, your trade war, and potentially a big shakeup at the Federal Reserve. I don't know where we go from here, but it ought to be interesting and exciting, that's for sure. All right, everybody, thank you for joining me. Go ahead and check out our new video over there on How to Trade Calm YouTube channel. It's on the Trendline Reversal Strategy. If you're interested, go on over there and check it out. Okay, everybody, that's it for now. Trade the action well, and we'll talk soon. See ya.